Welcome to Smart Cap Online Learning, and I'd like to welcome you in this online learning that is sponsored by VT Africa Holdings. And I hope you're enjoying these lessons, and in some other subjects, you're also enjoying them. Maths, mathematics, and life science, and yes, and I hope that very beneficial to you. And I hope that also with accounting you're studying, and it's also helping you. And I'm so glad that I'm getting a positive report that some students are happy about this program, and happy, the way we are teaching these things. And just to recap a bit, if there's any activity, don't forget to go to www.hellosmart.com to participate in that assessment. Just sign in as a guest, and there's a user your class ID number, that is 59875. Okay. Let's get to our lesson today. Remember, we have been dealing with theory for a long time, so I think once you're done with theory, then we'll do practicals. And as I said, I requested that there are those learners that are fast, and there are those that are slow, and there are those like we are not in the same pace. So just to bear with everyone, let's try to accommodate everyone. You see, there are those that they just catch it just very fast, and there are those that needs to be that they need they'll need me to repeat again and take it slow. So, but the thing is, the aim is that everyone should benefit. You see, after this lesson, every lesson, the aim is that everyone should understand what we're doing. It won't be nice that only 2-3 people understand, whereas the whole other people, majority, don't understand. You see, so just let's bear with those who take time to understand these things. So, well, just keep on, explaining things, explaining and explaining, so that when we get to practicals, whereby we just do the calculations, we do the statement of income, the cash flows, the inventory, then we just flow, we just do it fast. Because if you don't understand this theory, you're going to struggle how to handle certain transactions, you see. Yeah. So now, just to recap, we did these elements of accounting: assets, liabilities, income, expenses, equity. Just to remind, a lot of matriculants, because we're under a lockdown, and most of the students were not going to school. Remember when we were under level 5, we're not going to school. You see, so I think just a recap, it's needed. A revision whereby we have to remind one another of certain things, certain elements, certain topics in the accounting. That's why I chose that. Before we continue, we have to go through this, so that we should, have a day or two to recap on the principles of accounting, on the foundation of accounting, so that we should never struggle to move forward. You see, remember, we've got a very, very short time for our exams. So, and it's not nice to study, accounting under pressure, because when you study it under pressure, you might lose a lot of marks. You see, a lot of marks. That's why it's very important that you understand your basics, so that when you go to the climax and you do those, prepare your financial statements, when the questions they come, they're able to run through. You see, because a lot of time, most of the you experience it, that when you write an accounting paper, you don't finish it. Yeah, you don't finish. So because of still thinking because you forgot some of the things. So that's why we do this recap. Remember, we did these elements of accounting just 2-3 minutes, just assets, liabilities, income, and expense, and what do we do? Do we define what is and how to recognize an asset? Example of assets, and what is a liability? In a simple way, examples of liabilities. Remember, these are just few examples. And what is equity? We explained it yesterday in our previous lesson. And what is an income? And also the examples of income, and it could also be commission, and these are just examples. Expenses, done that, and examples of expenses and the treatment. Remember, this is just a summary how we treat this element. And so we'll just go few examples. I just create few examples. That's why I didn't write. I want to write them while we are going through this lesson, so that you should understand. Maybe I'll take yeah. I think for what we'll do is I'll just make easy examples. Then the next lesson will take questions from the past paper. You see, questions from the past paper, exam papers. So for now, we'll just create just simple questions so that you should understand. Then it's just a recap, then we'll take questions from the past paper. You see. Yeah, so just remember this. Always know this by heart. Okay. We did also an example relating to this, and yeah, then now we'll continue. So today, we're gonna just continue and talk about double entry. That's what we'll be talking about. So that's when one account that's your double entry principle. Yes. Double entry principle: when one account is debited, the other is credited, meaning that they'll always be like this. Remember, it's every time it's T account. So if one account is debited, the other will be credited. Then if another one is credited first, then the other one is it's credited, and the other one is debited. Sorry, debited. So we'll be talking about that. So we'll go through few examples. Let's start with let's see. Let's see. So okay, let's make few examples of maybe 2 or 3 examples of assets and 2 liabilities to income to expense, just on and on like that. Then so that you should get an idea. Okay. Okay. We'll start here. Let's suppose, okay, let's just type, just make just a brief example. Let's say, maybe we'll say ABC method. Let's say ABC limited. But both motor vehicle, maybe on credit. On credit, let's say suppose the amount is maybe, let's say 300,000. Okay. That's our transaction. No. Okay. ABC Limited Bird Motorbike on credit. Suppose the amount is 300,000. Now, firstly, remember this transaction must be an event that occurs within the financial year, so that we should record it on our financial statement. If it bought those the vehicle maybe outside the financial year, that means we cannot include in our current financial year. So when it's like this, we're going to talk about the double entry principle, and let's draw our T accounts. No, remember it's like this. Okay, maybe let's choose another color. Yes, remember this side, it's a debit side. It's a debit side. This side is a credit side. Let's do it. Debit, debit, debit. Sorry, and credit, and that's your credit. You see. So now this is your what motor vehicle. Now this maybe could be your trade and other, your payables. Okay. So this is what you got with that this. So now we're gonna do this double entry principle. Assets, remember they increase where on a debit side, of which this 300 it will come here So as it comes here, what are we going to write here? Payables. Sorry about that. Payables. Then remember, we bought it on credit. That means we've got a liability. And liabilities, they increase where? On a credit side. So you'll see motor vehicle 300,000. That is your, because I know that it seems like it's something that is very easy, but I just chose an easy question. You know, I just chose to do something easy so that you should remember, because a lot of principle. And if you're using a general, it will be like this. Debit your motor vehicle. Remember, those are your ledger account. That'll be your 300,000. 300,000. Credit your payables. Remember, this is how you write your journals. In your journal, you write like this. Then remember, this side is a debit side. This side is your credit side. Okay. Very so now let's go to another slide and make another example. Let's say something relating to assets. Maybe let's see the land that has a cost price of 80,000 plus 3. Okay. Now, this is another transaction. The land that has a cost price of 80,000 was revalued by professionals at 120. So how do you handle this transaction? Now, this is 9. Okay. Right. So now, this is what? It's a land. And here it's our revaluation. That means our land had a balance of okay, just very nicely. $80,000. So now there is a revaluation here. So we're gonna see revaluation of how much? It's not 120, remember. Now the land now is 120. That means there is a 40,000 extra. Then we credit the revaluation by 40,000. Okay. Then that will be your sorry. That will be your balance. Okay. You see the double entry principle, how it works. So now always assets increase on a debit side. And remember, revaluation is what? It's income. It increases on a credit side. So you see how we handle it. And let's say we sell. Let's make an example. Then another example says that, and maybe a piece. Okay. A piece of land was sold for 70,000. So what you're going to do is, how do you do it? We say this land, it was sold. How was it sold? Maybe let's say for on credit. All right, it was sold on credit. This is how we're gonna do it. We'll say receivables, because remember now, an asset is going out here. There is an asset that is going out. So now that asset, it's land. It's sorry about that. Receivables. So now since it's going out, it goes out, it decreases on a credit side by 70,000. 70,000. You see. Now, this asset, since it's going out, what we're gonna do is receivables. Receivables, remember this, it's our this receivables, it's assets. So assets, they increase on the debit. So it's our land for how much? 70,000. Okay, that's how we treat it. So I hope you understand. So maybe let's move faster and we go to our liability example. One example of our liability. Okay, let's go on liability. Let's say let's say our company is ABC Limited. Okay, ABC Limited. Sorry about that. As an example, another one, ABC Limited made a loan of 250,000 from Time Bank, and it is repayable in 3 years' time, 12% interest. So what are we gonna do? This is our liability. So that means we have incurred a liability. So now, but this 250,000 is increasing our asset. Which asset is it increasing? Bank. So now we're gonna do this. So I'm gonna do. I want to do the T accounts. I'll do the general accounts so that we should be quicker. I did the T accounts so that you should understand with the asset. So now I'm moving faster. I hope that you understand. So it's bank with debit bank with 250,000, and then we credit what? Maybe the loan, long-term loan. With how much? 200. Then there is an interest there, and we have to pay. Remember, interest is an expense. That is our finance cost, and it increases where? On a debit. So we're gonna debit interest. Interest on loan. So how much you're gonna say? Let me get my calculator. That is 250,000 times, that is 30,000. Then we pay that interest maybe through our, it is decreasing the money from the bank, and our bank is what? Our asset. So do you see how it works? The double entry principle. So I hope you are getting something and learning something from this. And then let's move forward. Now we'll be quicker. We'll go to another example. We'll just add a slide. Let's make an example of we did an example of a liability. So now let's do an example of income. So maybe we'll try to make it complicated a little bit. Okay. Here's is cash. Okay, it's cash, and maybe let's say percent of the credit yeah, I think it's a good example here. ABC Limited made 450,000 from sales. 60% of the sales is cash, and 4% of the credit sale was a discount given to customers who paid on time. We want to see what, when things are like this, what are we going to do? So now this is how we're going to remember, I hope you know your T account. So I'll do the general, the general. So, so we'll do this. Firstly, you've got to know. Let's separate this. 450. Want to know that 60%? It's cash. It's cash sales. And that is your sorry. That is your 270. Then your 40%. That is your 170. Your credit sales. I mean 180. See? No. And this 4%. That is your 7,000. So remember, when you do your income statement under sales, you say 450 minus discount allowed for sales. That is your 7,002. So this is what we're gonna do. Firstly, we'll say maybe bank. Income and the cash sales is how much? 270. And what else? Your then there'll be your receivables. That will be your 180. And you've got what? Your discount allowed. What is your 7,200? And you've got your sales. Yeah. That is your, sorry. Your sales here. Okay. That is your example of your income transaction. See? Maybe we'll take another example just to recap. I think the next lesson we should examples from the past paper. So this is just those simple examples just to recap from from the things that you have learned before the lockdown, and also just to remind yourself of a lot of things, just to freshen up your mind. So okay, that's your income. So let's do an example of an expense. Okay, let's see this expense. ABC Limited. Made Yes. So this one, it's an easy one. So what we're gonna do is we're gonna debit maintenance. Oh, sorry. Maintenance with 11,000 and credit what? Bank. Or if we're still owing, we didn't use cash, we're gonna say payables. So, 11,000. Okay. So that's how it works, and that is your expenditure expense. Example of an expense transaction. There's an expense. So we'll do our last recap example, that is dealing with share capital equity. Yes. An example on a transaction dealing with equity. ABC has 500 authorized shares, but 200 shares were issued for R2 per share. Then equity, remember, increases on the credit side. So the inflow of money is coming in our bank and our bank asset. So it will be like an increase of 400,000 and share capital. Which is our equity increase where on the credit side. So I hope by doing this, you'll be able to enter this into a T account, which are your ledger account, and because this journal, it's like a similar way of treating it in a general journal. It's a similar way of capturing, almost more or less the same with general your ledger account. You see, so I think it will make it easier. I think by now you understand how to treat, you know, these elements, where to debit them, where to credit them, and what are assets and liabilities, where do they increase, where do they decrease. And I think it was a quick recap. And from here, what we can do is, after this, we can easily start with you know, past papers, you know, questions from the textbook. Yeah, and then we can just go through them very, very fast. And I think it will help you. So we'll stop right here with the lessons. Enjoy the day.